take great pleasure in welcoming you to the Q3FY22 conference call of Emami Ltd. I have with me from the management Mr. Mohan Goenka, Director, Mr. Rajesh Sharma, President Finance and IR, Mr. Vivek Dheer, CEO International Business, Mr. Vinod Rao, President Sales, and Mr. Gulraj Bhatia, President Healthcare Division. Without further ado, I'd like to hand over the call to Mr. Goenka for his initial remarks. Over to you, sir.
Thank you, Percy. Very good afternoon, friends. I welcome you all to this conference call on Emami's result for the third quarter and 9 months ended 31st December 21. The beginning of this year is not what we had expected to be, owing to the onset of the third wave of the pandemic. But I hope that all of you and your loved ones are safe and keeping good health. As by now you must be aware of the board restructuring that has been announced today. While both Harsha and I have been responsible for day-to-day running of the organizations for many years now, our new roles with additional responsibilities define the new leadership of Emami Ltd, which we respectfully accept. However, we humbly and sincerely seek your support, blessings, and partnership as we move forward. Coming to our quarterly performance, this quarter we characterized by high inflationary levels leading to a deceleration in consumer demand. Despite this demand moderation, coupled with high base of 15% growth in previous year, our consolidated revenues at 972 crores grew by 4% over previous year and at a 2-year CAGR of 9%. Since the last 6 quarters post the pandemic, we have mostly delivered 2-year CAGR growth of around 6 to 9%, and our quarter 3 performance is also in line with the same. During the quarter, our India business grew by 3% with flat volume growth. This performance is over a high base of 14% growth in previous year, which translates into a 2-year CAGR of 9%. On a domestic level, Boro Plus range grew by 2% due to sales phasing and preloading in September. However, considering sales of last 4 months, that is from September to December, Boro Plus range grew by 9% over previous year. Other brands like pain management range grew by 7%, Navratna grew by 11%, and 7 oils in 1 grew by 5% during this quarter. Kesh King was more or less flat, while male grooming range declined marginally by 3%. Healthcare range also declined by 6%. It grew by 2% excluding the immunity range. On a 2-year CAGR basis, both Boro Plus and pain management range grew by 10% respectively. Healthcare range grew by 14%, Kesh King by 7%, 7 oils in 1 by 18%, and male grooming range by 1%. However, Navratna was flat on a 2-year CAGR basis. During the quarter, modern trade grew by 14% and e-commerce continued its robust run, growing by 75% over previous year. I am happy to share that we are now capturing more than 14% of our domestic revenues through these new age channels, which is 310 basis points higher than the previous year. CSD revenues grew by 16% during the quarter. Our distribution initiatives continue to progress with additional 5,800 rural towns being added in the last 9 months through Project Khoj. Our revenues and presence in standalone modern trade outlets have also increased, with our coverage expanding 40 cities and more than 3,400 outlets. We have also activated more than 26,000 additional outlets for our healthcare products by focusing on Ayurvedic bhandars and chemist outlets. Coming to our international business, I am happy to share that sales have grown by 7% during the quarter, which translates into a 2-year CAGR of 16%. If we exclude sales from hygiene and immunity range, international business grew by 14% during the quarter. Growth in the international business was led by key geographies like Bangladesh and Sri Lanka. Whereas MENA posted flat growth and CIS declined on account of high base of hygiene sales in previous year. If I look at profitability this quarter, I believe we have performed well despite strong inflationary pressure and a high base of previous year. Gross margins at 67.4% contracted by 300 basis points over previous year due to steep inflation in key raw material prices. Our EBITDA at 342 crores was flat over last year, but grew by 14% on a 2-year CAGR basis despite these challenges. The raw material inflation seems to have peaked, and we do not foresee any major gross margin pressure in Q4. PAT at rupees 220 crores grew by 5% over previous year, and PAT margins at 22.6% expanded by 20 basis points. On a 2-year CAGR, PAT grew by 23%. Similarly, cash profit at 304 crores were flat over previous year, but grew at a 2-year CAGR of 15%. For the first 9 months of the year, our consolidated revenues at rupees 2,422 crores grew by 13%. EBITDA at 788 crores grew by 9%. PAT at rupees 483 crores grew by 31%. And cash profit at rupees 734 crores grew by 13%. In view of availability of net cash of over 700 crores and our stock prices being traded at a significant discount compared to overall FMCG market, which we believe is not the true representation of the company's market value, the board of directors have approved a buyback of shares up to a value of 10% of our share capital and free reserve at a price not exceeding 550 per share. This step also demonstrates our confidence in the company's fundamental strength and its future prospects. Further, I am also pleased to inform that the board of directors have declared a second interim dividend of 400%, that is rupees 4 per share for FY22. The business environment for the last 2 years, unfortunately, hasn't been too conducive, as we all know. The pandemic and its ever-changing variants, personal losses, high cost of raw materials, loss of jobs, sluggish rural demand, reduction in discretionary spending, etc. have affected business across. There have been many learnings too. Ability to adapt to newer ways of doing business, opening up of newer channels, boom in e-com, birth of D2C brands are some of the positives that we have witnessed and will focus in the coming days. Digitization will continue to play a large role in the business in every sphere. We will take every step and invest wherever required to fuel the engine of growth and charter a new growth trajectory. With this brief, I now open the floor for Q&A. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Abneesh from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on the e-commerce marketing. You have given good examples of what you are doing. So I wanted to understand this Farm Easy barter deal. what kind of response you have seen, and have you tried these kind of media barter deals earlier? And similarly, in Nykaa, for example, this King onion range promotion, etc. So in both these sites and maybe even on Amazon, what kind of portfolio are you getting a good scale up versus the GT in terms of consumer response?
Avnish, Vinod is here. Vinod will be able to answer this.
Right. So the media barter, I'll just take that first. So the media barter is essentially what we do is we tie up with the account, and in lieu of our reach, so what they test is they look at the reach what we would gain out of any of our print communication, and you do some kind of an exclusive arrangement with either the Flipkart or Amazon, and it's an exchange of logo. In lieu of the reach Flipkart gains on the back of our brands through print media, they give us requisite equivalent slots on their e-com pages, and that helps us participate into events. So it kind of brings our cost of visibility and ACOS down in participating with an account. And one, it's mutually satisfying because it gives them reach. Two, it helps us bring our cost down visibility and makes us participate in larger and larger events, and that helps us drive consumption for our brand. And we've seen success in all the initiatives we've taken, whether it is Fair and Handsome or whether it is Onion Oil, or lately we did a tie-up with the Zovo. So, and we see multiples of 4x, 5x numbers during these periods, which are even sometimes non-event led, which is the larger events like Republic Day, etc. And that gives us, helps us drive growth. In fact, strategically, we are looking at that as a revenue stream to drive visibility on e-com portals as we move forward. And regards to portfolio and e-com, we've seen the mix, the core growing. We see we've gotten into combo operations and the right kind of composition with the right kind of value per unit. That is driving growth for us. And we've seen a complete portfolio growth, whether it's the seasonal driven through lotions and the entire hair care range, onion range, and the new digital brands. We've seen tremendous traction around that. And our entire portfolio is aligning to what the e-com customer wants in terms of value per unit as well as the latest trends. And that's the entire endeavor to grow in e-com for us.
Sure. My second question is on Chyawanprash. So it is hardly 8% penetration category. But when I see you, Dabur, etc., keep launching differentiated products, you have come out with Jaggery, Chyawanprash. Similarly, Dabur has got Avleha, Kesar Prash, Ratna Prash, and all that. So for the 8% penetration category, why is this needed? Is it because when COVID waves die down, then to make the customer buy, these kind of innovations are needed? So is that the main reason? Because penetration is very low.
Gulraj?
Hello. Good afternoon, sir. Can you hear me well?
Yeah, we can hear you, Gulraj.
So I think you raised a very valid point as to whether, with the lower penetration, does it make sense to have variants which are what is the purpose of the variants? Yeah, while the penetration might be low, but as a category, it's a fairly large category in overall terms. So it's a category which is currently around 1,200 crore rupees as a category at company sales price. So in that sense, what has happened in terms of the broad variants which have been launched over the last few years is that there are many people who have a sugar problem, they have diabetes. Many people may not be aware that Chyawanprash contains about 60 to 70% sugar as part of its formulation. So we launched Chyawanprashad about 5-6 years back. We got a very good response. In fact, in relative market share terms, we are much more over-indexed in terms of this category versus the regular Chyawanprash. And when we launched Jaggery Chyawanprash about 1 year back, we got a fantastic response to that also. So in a sense, both at the consumer level, where there is need for sugar-free products or products which don't have refined sugar, And at a category expansion or a market share growth level, some of these variants do make sense. Yes, in the past, there have been variants launched by some of the market leaders where they've not done well, maybe Chyawanprash for children, Chyawanprash containing chocolate, etc. But what we are focusing in on is very clearly in a large market, which has done very well over the last couple of years, though for the last 6-7 months it's not performing because of the high base. We want to obviously grow our market share and offer to consumers differentiated value of it. And we were the first organization to launch the Jaggery Chyawanprash, and it's become a surefire winner in terms of consumers' acceptance. So the idea is to see how we can offer differentiated offerings which make sense, and obviously to work on growing the penetration also for the overall category. So penetration has gone up by about 50-60% over the last 2 years. Earlier the penetration was about 5%, now it's gone up to 8%. And we do see this continuing with overall interest in adults increasing in the coming months and years.
That's useful. My last quick question on Bangladesh. Your competitor Marico has come out with cooling hair oil. How does this impact you, and what would be the plans for Bangladesh?
Hello. So, as far as we are concerned, Navratan is growing very rapidly in Bangladesh, and we have not got any hit from their actions or their activities at the moment. They have a very marginal distribution at this stage, and even I think impact is very, very minuscule. But we are very watchful and continuing with our activities and our promotions for the brand in Bangladesh. So Navratan is going well for us in Bangladesh. No worries over there.
Okay, thank you. That's all from my side. Thank you.
Thank you. The next question is from the line of Chanchal Khandelwal from Aditya Birla Capital. Please go ahead.
Hi, thanks. Hi, Mohanji. Can you hear me?
Hi, Chanchal. Yeah, I can hear you.
Mohanji, on this change in role for both you and hers, can you define how does it play and how will it play out going forward?
Mm-hmm. So, Chanchal, by and large, see, the roles are more or less the same, I would say. But definitely, as you get a designation, your responsibility becomes multifold. Mr. S.K. Goenka, who was the managing director, now Harsh is taking up the responsibility. And I have also become a whole-time this thing. So, definitely, it is towards the succession planning. I have been saying that, there are other family members also in the team. But two of us would be driving from the front seat. So overall responsibility lies on both of us to drive the growth of the company. It just brings an added responsibility.
Okay, so it's just a change. On the succession planning, Mohanji, it's been time we have been hearing this. I mean, I know it's a difficult thing to change. But I mean, we have been hearing this pre-COVID, and it's almost been 2 years now. Any thoughts or any timeline you would like to give it to us as to when and by what are the steps you are doing to, if you want to get someone from outside the family office, if at all?
So, Chanchal, we have been continuing with the same answer that as of now, this is part of the succession planning. The two of us have taken a bigger responsibility. And as I said, we are not averse of getting anyone from outside. But when the right time comes, then only we will be appointing somebody from outside.
Sure. But still, I mean, the only reason of asking Mohanji is that if you work with a timeline or if you have some planning in the back end as to give some role, then it becomes more clarity to us as an investor. So that was the point I was trying to understand. You could argue, you have a thought in mind, but any timelines or anything which you can publicly share?
There is no particular timeline, Chanchal. You would see that we have appointed very, very senior resources. We are moving towards a direction where we want to be very clear what would be the role of the new person who comes in. So definitely the move is towards that, but there is no clear timeline on that.
Sure. Secondly, on the male grooming category, I mean, the CAGR 2-year CAGR of 1%. Again, male grooming, you define the space. Now Nykaa is entering into male grooming space. I mean, since you have defined this category in the past, you have a bigger right to win. But what are the investments you are doing? The numbers are not, you may say 9-month numbers look better, but that's also on a lower base. The 2-year category is still 1%. How do you want to create this male grooming category? What are the things you are doing here?
So, Chanchal, male grooming has been mostly hit due to the pandemic. You would have noticed that all the social events were cancelled. All the school colleges were closed. People were not stepping out of their houses. So the male grooming fairness market degrew by almost 40%, in Nielsen. So even though we try to maintain our numbers, we try to maintain our market shares. Now, once the market opens up completely, I think then we would bring enhanced ad spends into Fair and Handsome. We signed up Salman Khan. We could not do much because of this pandemic. But now we would get very, very aggressive as far as the male grooming is concerned.
So thanks. That's from my side. Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good afternoon. So, if you could just give us a little bit of your sense on, how you're seeing the rural, demand pan out. Obviously, there have been multiple calls where companies have said that there is a slowdown. Nielsen has also pointed it out. But if you could just give a sense, Mohanji, of, how things have been for you guys, and given your high salience, how are you, what's the on-ground picture like and outlook going forward?
So, Harit, I cannot give a specific timeline when the market would revive. Even the month of January was subdued, I would say, as far as the rural demand is concerned. So, the kind of inflation that we are seeing, we really don't know when it would improve. But now that we would enter into the season of summer, hopefully once the summer season starts, we will be able to dump some of our Navratna oil in the market. But let us wait and watch. We have to wait for another, I think, month or so to give you a correct picture.
And Mohanji, for us, how has rural versus urban been for the quarter? How are those trends been?
For us, rural was slightly better than urban. Urban was almost flat. Rural we grew very marginally.
And from a general trade expansion strategy perspective or better throughput perspective also, is there something that we can do to kind of mitigate some of this demand-led pressure in terms of higher throughput, more outlets? Is there a GT plan there for the next, say, 6 to 12 months, which can kind of partially mitigate this stress?
There is a continuous, Project Khoj we are very aggressive as far as the Project Khoj is concerned. We are investing a lot of money. But see, overall, when markets are so weak, it doesn't move the needle, unfortunately. But these are long-term strategy. We need to continuously invest on our rural distribution expansion plans. But they really don't mitigate, the kind of slowdown that is there in the market right now.
Correct. And the last thing, actually two things. One was on the digital brand. If you could give some sense on the digital brand that you have stake in, how the kind of movement, performance, etc. has been. That'd be very helpful.
So, Harit, we have launched digital brands in almost all our products.
Right.
To start with, we imported Creme 21 from Germany. We have started rolling it out in Indian markets. Then, secondly, we launched Kesh King Onion Oil. That is another digital first brand. We also launched Navratna Therapy, which is again digital. We have launched some salon specific products under Fair and Handsome, which is again digital first brands. We have just entered this space, though the offtake is a little slow, I would say, at this point of time. But once the market becomes normal, once everything is, we would definitely try to strengthen this portfolio. But overall, I am very happy to report that, over the last 2-3 years, the way we have progressed on the modern trade and e-com side, today the contribution is almost 14% of our domestic business, which is quite remarkable, I would say.
Right. And last thing was on the margin side. So obviously, you've done extremely well the first 9 months of this year at a time where, you've seen significant inflation. Just wanted to get your sense on the going forward, any commodities in your basket where you are seeing incremental pressure, which could see a incremental impact on margin, or that's something that you still can maintain in a band on a YY basis?
So as I said in my opening remarks, Harit, we are not seeing much pressure on Q4 as far as input cost is concerned. That only thing to watch out is the crude prices, how they perform. Post the elections, what is the kind of increase in petroleum prices we will have to see. But by and large, I'm not worried too much on the margin front for Q4.
Got it. That's it for me, sir, and congratulations on the additional role. Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Shirish Pardeshi from Centrum Capital. Please go ahead.
Yeah. Hi, Mohanji. Congratulations for the new role. Good afternoon, and thanks for the opportunity. 2-3 questions. The first question comes on mind. On the BoroPlus, we did a good job in the start of the quarter, but however, the winter has not panned out the way. I was more interested how the core BAPC has performed. Is there a growth or is there a decline? And when you say that the growth has come primarily is because of the product extension, or the core has really grown?
So in BoroPlus, Shirish, the antiseptic cream has not grown. Most of the growth has been led by BoroPlus lotion and BoroPlus Vasocare and some of the other extensions that we did for BoroPlus. So the BoroPlus antiseptic cream is by and large flat. If I'm right, Vinod, or we have degrown by 2-3%?
Yeah, we have degrown by 2-3% in this quarter. But if we look at from September to December period, we are almost flat in that.
Yeah. Thank you, Rajesh. Though the reason why I'm asking that we have now launched 48 gram price point 10 rupees. Is it the price correction or is the new SKU what we have launched?
So that is on the soap side, Shirish.
Sorry?
That is BoroPlus soap which we have launched the new SKU.
No, I got that. But why do we need a 10 rupees SKU? Is it that a penetration-led strategy which we are trying to drive the trial generation? Or, not many people have a 10 rupee soap. 10 rupee soap is not a regular soap which people would.
Yeah. So the idea, Shirish, is that the way we are expanding our rural reach, we need a price point where we can enter rural markets, particularly with soaps. Because most of our categories you would see, they don't really penetrate to those outlets. Soap is the entry point. So we launched a 10 rupee soap, and where we are getting good results.
So basically we are targeting a larger audience.
Absolutely.
Because soap is quite, hugely penetrated.
Absolutely.
Second question on pain management. Although last 4-5 quarters has been really boon for pain management, but if you can split the growth, how the core Jandu portfolio has done in terms of distribution penetration, and largely it has come because of distribution, the efforts what we are doing in rural, or there is a real volume growth which is shown this number?
So Jandu has grown by almost 10% for the first 9 months, and this is purely to do with the pandemic, I would say. As I have mentioned that we have added more than 45 lakh new consumers into the balm category. Also, the household penetration, the per capita consumption of balms have gone up by almost 15%. So overall, there has been a huge increase in terms of penetration as far as balms are concerned, both for Jandu balm and for Mentho Plus Pain balm.
That's exactly my point. Mohanji, I was saying, because it's a traditional category, it's more of a deep rural category, showing a growth. I think something is going really right. So whether this kind of growth continues.
We have actually capitalized on this pandemic, I would also say, because in the last 6 quarters, we have launched more than 5 to 6 new campaigns. So every time, the new variant, and we have addressed the needs of the consumers with our new campaigns. So which has really helped into the penetration into newer households. Per capita consumption, as I said, has also gone up. And honestly, in the month of Jan also, we have seen supernatural growth as far as the balms are concerned. It has really entered into a new households.
Okay. I have 2 more questions. One is on the international business. We have seen a decent growth in the challenging environment, but when can we see a high, strong double-digit growth? Because if I look at your commentary last 4 to 5 quarters, we have seen a lot of challenges in this business. So, if the challenges are behind, because you did mention that CIS country there is some problem of the high base, but I think in terms of penetration and distribution, rejig what we have done in CIS, my sense is that should have started showing into the numbers.
Vivek? Vivek, are you there on the line?
Vivek sir, requested to unmute your
Hello.
line from your
Hello. Sorry. I was on mute. I was talking. So when you see the international business, the 7% growth which we have delivered this quarter is on a very high base, where we have grown by close to around 30% in last year in the same quarter. So that has led to a slightly lower. When I look at 2-year CAGR, in this quarter we have grown by around 15%. Most of the countries we are up on track, except GCC, where we're still seeing some trouble. And the troubles are over when we see the January data. And the discounting which was happening in the market has all been corrected by and large. And now we are back on track, and we should be having a good double-digit growth from now onwards.
Okay. Mohanji, my last question on the margin front. We have seen that you have managed very well the margin. But if you can give me a sense, because what I see that the ad spend is remaining flat, maybe marginally 2% up. But in the context, if the demand is not coming, so what is your position? Are you going to invest more on advertising and keep the brand going up, or you will cut the ad spend and maintain the margin?
By and large, Shirish, we would not disappoint on the margin front. As I said, that the markets are not very conducive for growth, what looks like. That's what we have seen it in the month of Jan also. So we would be very wise in terms of our spends. We would only spend at the right time.
Okay. Thank you. Thank you and all the best.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Percy Panthaki from IIFL. Please go ahead. Mr. Panthaki, requested to unmute your line from your side, please.
Hello?
Yes, we can hear you.
Yeah. I just wanted to ask on the pricing that you have taken. I think you have taken a 3 to 4% price growth on a YOY basis. So 2 parts to this question. One is with such a small price increase and commodities are inflating 40-50%, how is it that you are able to manage with such a small increase? All the other consumer companies have taken a price increase of anywhere between 5 to 8% on a portfolio level. So that is the first part. And the second part of the question is that is there a corollary to this, is that therefore do we have some more headroom for price increases since versus the overall sort of FMCG industry, our price increases are less. So even if we were to benchmark versus the industry and take up 2-3%, it would be possible without having volume backlash. So is my understanding correct on that?
So, Percy, on a 2-year basis, our price increase have been more than 3%. That is very important. We have to be very careful in our price increases because we have to balance between volume and value growth. Also, what has happened is due to the mix of our sales, we are not seeing the kind of margin erosion because some of the brands have very high gross margins, which have performed well during the pandemic time. That's why you are not seeing the kind of pressures. So we balance that out. We would not really want to be too aggressive as far as price increase and pass it on to the consumer. And overall, there is so much of inflation, But as I said, we would definitely try to see that our margins are intact. If we see there is tremendous pressure on our margins, we would definitely be aggressive on our price increases. But as of now, I said that Q4 seems to be fine. We would wait and watch for an aggressive price increase.
Understood. Secondly, quickly on Kesh King, I just wanted to check over the last several quarters, Kesh King as a brand has done very well. Even on a 2-year CAGR basis, I think it was the best performing brand in at least the listed companies, the data that we get. But this quarter, there has been some slowdown. Even if I look at the 2-year CAGR, I mean, it's still okay, but there is a slowdown in the 2-year CAGR versus what we have seen earlier. So, is there something that you can do to make sure that we remain fast growing? I mean, there were several initiatives taken earlier on shampoo. There were several things done. You had taken a price cut and volume went up, etc. I think in hair oil you have given the applicator, etc. Now those big ticket initiatives have sort of, I think, been digested, and it's because it's been 2-3 years since we implemented that. There are some smaller initiatives on premiumization like onion oil, etc., but that will of course remain quite small right now. So is there anything else you can do which is material in nature which will push up the growth of this brand?
So you have summed up, Percy. I think by and large, last ticket changes have been done in Kesh King. You are right. Over the last 3-4 months, in this slowdown, particularly the rural slowdown, we have seen a dip in the Kesh King numbers also, which continues in the month of Jan. So let us wait and watch, Percy. Honestly, there are not much changes that we are doing right now. We of course signed up Shilpa Shetty as a new brand ambassador for Kesh King. Once the markets are good, we would just get more aggressive. That's it.
Thank you, sir.
Thank you.
Thank you.
To ask a question, please press star, then 1. The next question is from the line of Amnish Agarwal from Prabhudas Lilladher. Please go ahead.
Yeah, congrats Mohanji on your elevation. I have a couple of questions. My first question is regarding the raw material inflation. Can you give us some idea that which all raw materials we are facing inflation and where now the impact of inflation is actually getting, say, more somber or cooling down?
So two of the raw materials which have really gone up are one is the LLP, and LLP has really gone up, I think, by about 30-35%, which has hit our margins. And secondly is the oil, Rajesh, which is that oil I'm forgetting. So
rice bran oil, the vegetable.
Rice bran oil. Rice. So rice bran oil, the prices had really gone up significantly over the last 8-9 months. These two raw materials really disturbed our margins.
Okay. So my second question is regarding the hair oil as a category, and this is regarding the industry itself, that when I compare the growth of hair oils across companies, okay, then this is one category where there seems to be volume pressure and demand pressure more than some of the other segments. So is there anything inherently wrong with the category, or why do you think is the category suffering more? That is question part one. And the second is that how much of Kesh King sales are from the rural areas?
So, Abneesh, you are right that hair oils over the last few quarters have not done so well. But see, for us, Navratna is our biggest contributor as far as hair oils is concerned. Seven oils is one has done pretty well. Kesh King also has done well. But what was pulling us down was Navratna. And Navratna, primarily because of its cooling properties. And during the pandemic, people were averse of using cooling products because of the fear of getting more cold and, that's why we saw a dip in Navratna oil. Once this pandemic is over, I'm sure that Navratna would also bounce back.
But sir, on the slow growth for the industry as a whole, because every company which was into hair oils is reporting a pressure, which is relatively more than other, you can say, personal care or FMCG products.
Not for us. You would see our numbers for 7 oils in one. We have grown phenomenally well. Same is for Kesh King. What has pulled us down is only Navratna, and I told you the reason. And as far as Kesh King rural contribution is concerned, I think it is almost more than 70%.
Okay, and how much of it is selling in small packs?
We don't have small packs. Large pack sells in rural areas.
Okay, thanks a lot.
Thank you. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. So I just wanted to get a sense on the revenue outlook. You mentioned that you managed 6 to 9% figure in last few quarters, and while this is better compared to what you've done in the past, are you satisfied with these numbers, or you think getting to double-digit consistent growth is possible in if not in next couple of quarters, but FY23-24? How are you thinking about double-digit revenue growth?
No, so Kunal, no one is happy with single-digit growth. Everyone aspires to get double-digit growth, and whatever we plan, whatever initiatives we take, is to get a double-digit growth. Always you have seen that our brands are still less penetrated. We want to get into the rural areas with most of our brands, taking directly to rural areas. Once the market is good, presently, see, we are in the midst of a slowdown, and we can't do much in these times. What we can do is only keep on expanding, keep on, maintaining our shares, and not disturb much equilibrium. So, let the new year start. We are, of course, now focusing on our budgets for next year, where we would definitely internally take a double-digit target. But for that, the markets have to slightly bounce back, honestly.
Yeah, but I'm not talking about, say, last few quarters. Even if I look at last 5-6 years, it's been the same story, mid-single-digit growth, maybe going up to high single-digit growth. I think, is it unrealistic to expect double-digit growth for the categories now, considering that some of them are mature, or, I understand that penetration levels are still low, but many of them are niche categories and might not have potential to get to very high level of penetration?
Kunal, I would not see it from that lens. You would see some of the categories, even we have performed extremely well, double-digit growth for a lot of categories. What has really pulled us down is Navratna oil or some of the categories, unfortunately. As इसी market में तो we have grown, balms have grown, Chyawanprash, lot of categories, 7 oils in one. Those categories have grown at double-digit growth. Okay. So, if अभी तो market ही नहीं है, तो what can we do?
Okay. Understood. Second one, you had a strong launch pipeline for Chandu healthcare products. Can you talk about the response? Have you done launches, and how is the response? And also, if you can update us about the Chandu healthcare portal, Chandu portal.
Yeah, Gulraj is there. Gulraj would be able to answer.
So, over the last 1.5 years, we've launched many new product segments, such as in health juices, single herb tablets, health drops like Tulsi, Haldi. As I mentioned earlier, we've also launched the Chyawanprash Jaggery variant. So we are seeing a good scale-up happen in the Jaggery variant, definitely for Chyawanprash. We are also doing well on the hair juices like aloe vera, amla, etc. And we've also done a few launches in the last few months in the Zandu Care direct-to-consumer D2C portal. So in some of the categories such as single herb tablets, we have seen a high scale-up happen on the platform. So we believe we are in the right direction, and we have many more NPD digital first brands planned for the next year, which will be launched both at the D2C level and some of them in the retail market, basically. So we are looking at understanding the consumer need gaps and what are the gaps in our portfolio versus what are potential categories in terms of size and growth potential. And we are looking at an omni-channel approach where there will be some which are launched with the right support in GT, some in the modern trade, and some in the online space.
What has really done well, Gulraj, I think, is the cough syrup.
Yes, cough syrup has also done extremely well. We had launched it about
that you can highlight, right? Which is picking up now.
Right.
In the last 2-3 quarters in healthcare, cough syrup is picking up.
Absolutely. So we had launched it about 2.5 years back, and from the middle of 2020, we started investing with the right communication strategy on it. Month on month, quarter on quarter, it's been doing very well, and we saw all-time high sales happen in the month of January on this.
Okay.
Yes, it could have been partly.
Sorry.
I'm sorry. Part of it could have been the high January sales are of course helped by the third wave, but we believe that even before the third wave happened, we were doing very well on the brand. We've also launched 1 or 2 variants in Vigorex, which has also done well. So yes, some of the NPDs which are more focused on the pandemic are linked purely to say what the level of incidence is. But at an overall level, I think in terms of the NPD launches, we've done fairly well, and we are gaining market share and traction in some of them. And for the D2C platform, as I said, we've got a host of NPDs plans for the coming months and years. Sir, you were saying something.
No, I just wanted the update on D2C platform only, Zandu Health portal. So I think you covered that now. Okay. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Varun Basrur from Julius Baer. Please go ahead.
Good afternoon, sir. Thanks for taking my question. Is there any update on revocation of pledge on the shares?
Any allocation in the sense, Varun? Sorry?
Revoking the pledge on the promoter shares.
So Varun, as in all my calls, I have been continuously saying we are committed to revoke, but once we sell some of our other assets, then only it would happen. So it is taking some while, but hopefully you would see something in the next 2-3 quarters.
So this pledge will be entirely or mostly removed in the next 2-3 quarters?
Not entirely, but we would definitely reduce it in the next few quarters.
All right, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you, Percy. Thank you all the participants for joining us today in this our Q3 results conference call. Thank you.
Thank you, everyone.
Thank you very much.
Thanks. Thank you. Thanks, everyone.